It's scared a lot of people. What do you think's happening right now, just in terms of the return of volatility? Is it something to be worried about? What's causing it?
Well, if you own stocks like you'd own a farm or apartment house, you don't get a quote on those every day or every week or anything. You look at the business, and the value of American business depends on how much it delivers in cash to its owners over between now and Judgment Day, and I don't think it changes in 10% in a 2-month period if you're looking at it as a business. Now you've got anything can happen in markets. I mean, anything can happen in markets, and that's why I say don't ever borrow money against securities. That markets don't have to open tomorrow. I mean, you can have extraordinary events. So I think to some extent you can get some of the instruments that people don't understand very well that have a lot of firepower in them.
Like
and
the volatility index and things that are tied to that.
The idea of people taking a position, and they're gambling. They're not investing. Nobody's investing when they buy, some supercharged index on how the VIX does or something like that. They don't need it in their life. It's an unnecessary instrument. Now, they will create instruments that the public will buy, and you can just count on that. Wall Street's been doing that since they met under the buttonwood tree in 1792 or whatever it was on the exchange. So, but if you're investing, if I'm going to buy a half interest in a McDonald's stand and you're going to run it, or McDonald's franchise and you're going to run it, I look to the business to determine whether I made a good investment. And I'm concerned about, whether we have new competition, how we do over the years. But it's the business I look at. When you're just looking at the price of something, you're not investing. I mean, if you buy something, Bitcoin, for example, or some cryptocurrency, you're not looking to the asset itself to produce anything. If you buy an apartment house, you're looking at how the apartment house does. If you buy a farm, you're looking at the farm does. If you buy a whole business, you're looking at how the business does. If you buy a part of a business, why shouldn't you look at how the business is going to do? But people get charmed by lots of action and the fact that things are liquid and all of that. And it does have repercussions back into the market when you get something like, an ETN arrangement on the, supercharged on the VIX. I mean, where you can lose 90% of your money in one day. I mean, that really doesn't belong with the word investment. I mean, it's a gambling form of activity.
Although you've said yourself, you talked about this in the annual letter over the weekend, and just even at the top of the show, where when you look around for a business that you want to buy, you can't find any at attractive levels. However, when you're looking at equities, you do see that as a good place. That Berkshire has been a net purchaser of equities this year in 2018, and that's because you like the deals that you're getting in the market.
You can buy small pieces of businesses for less than you can buy whole pieces of businesses.
For the premium you'd have to pay if you were buying the whole thing.
Yeah, so you get a bargain as an investor compared to what I can get in terms of buying the whole business. And people, if they just think of stocks as pieces of business, they'd be so much better off than thinking of them as little things that move around in price. And I think with Berkshire, we have an unusual number of people as shareholders who just look at Berkshire as a business. They look at it as a savings account. They put some money in 20 or 30 or 40 years ago. We retain it and reinvest for them, but we're their savings account. And that's the way I look at my own stock. That's the way Charlie looks at his stock.
Warren Buffett doesn't talk about Nvidia much, but as we have come to shockingly realize right now, it is because he has a secret portfolio where he owns 3 AI stocks that are believed to surge even more than Nvidia. This isn't just any portfolio. It's a $642 million conglomerate managed by New England Asset Management, holding stakes in some of the most buzzing AI stocks on the market today. What are the stocks, and how can we learn from Warren Buffett's strategy? Let's delve deeper. Welcome back, everyone, to Investocracy.
Is there a tipping point along the way, or is it a gradual decline in terms
Nobody
of these
knows.
things?
Yeah, but it is gravity. I mean, if you told me interest rates were going to be 15% next year on long bonds, there's a lot of equities I wouldn't want to own now, and I would buy a lot of governments at 15, and I kind of wish I had it in 1982, but I didn't.
If I told you that the long bond was going to trade at 4.5% to 5% next year,
it makes a difference. But it's been idiotic to own long bonds during the last. I talk about this in the report in terms of it's just been idiotic, and big public pension funds and all that, they sat there and they own bonds. Now they may have bought them on a 4 or 5% basis, but if they go to a 3% basis, they're selling way above par. The way people think about it is they do some very silly things.
I mean, you lay this out in the annual report, but a lot of investors are told, retail investors are told, that they should have a certain percent of their portfolio in bonds. Maybe they're told 60-40, maybe they're told 70-30 stocks to bonds. That's something that you should do, and that's the safe way of doing it. What are they missing?
Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because your stock goes down, you shouldn't own a stock at all. No, I mean,
what are dumb things? Selling a stock?
Yeah, selling a stock because it goes down. I mean, if you buy your house at $20,000 and somebody comes along next day and says, "I'll pay you 15," you don't sell it because the quote's 15. You look at the house or whatever it may be. But some people are not actually emotionally or psychologically fit to own stocks. But I think more of them would be if you get educated on what you're really buying, which is part of a business. And the longer you hold stocks, the less risky they become. Whereas the longer the maturity of a bond, the more risky it becomes.
Do you feel like that's a message that is getting through to people? It's one that you repeat again and again. And I always feel like I was watching a lot of the Olympics, and I felt like what they do in the Olympics is so easy. These guys sailing through the air and doing massive spins on the ice and turns. And then I read your annual letter and I think, oh, it's really easy to invest. And then I walk away and realize it's not that easy.
It's not easy psychologically for many people, but I've been teaching since I was 21. I taught my first class on investments, and I had a class last week with 11 schools, 220 students, and some of them get it and some of them don't. People would rather gamble. I mean, the idea that you can double your money in 6 months, that's just going to, it's why people go to the races, why they go to Vegas, whatever it may be. They even know the odds are against them, and they still do it. I mean, it's a strong instinct to want to get rich fast.
Let's just get right to it and dissect the 3 stocks Warren Buffett secretly owns instead of Nvidia. First, we have Broadcom with nearly $4.5 million invested in its shares. The company's Jericho 3 AI fabric, capable of linking 32,000 GPUs, is a testament to its prowess in artificial intelligence, a detail not lost on Buffett's discerning investors. But then we find Microsoft as the second stock that Buffett secretly owns. With Neom holding shares worth roughly $3.1 million, Microsoft is leveraging AI to bolster its Azure cloud services. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Meantime, we're watching big tech. These CapEx figures that we got last week from all the hyperscalers are going to start feeding into the supplier earnings, which we're going to get over the next few weeks. Nvidia, Dell, Broadcom. Nvidia is up 3%. This is going to take you almost back to the 50-day, which it lost earlier in January. News out of onsemi today. Revenue was a bit light. That was down pre-market. You mentioned OpenAI, and they did say that they're working further on their custom chip design, which then they would outsource to TSMC, which is having its own issues regarding the earthquake in Taiwan. Guidance will be at the low, they'll be coming to the low end of guidance, they say. That's a healthy rebound for Nvidia.
Well, there was a positive call, too, on it today. Evercore says the DeepSeek sell-off creates an opportunity, quote, we're buyers into earnings. Tactical, obviously, but, there's a fair debate happening on the street right now as to whether the big beat and raise days for Nvidia were over before DeepSeek, just because how can you possibly keep up? I'm not saying you can't beat and raise, but how do you beat and raise by that much continuously to keep the stock and the expectations where they have just been unbelievable? Now DeepSeek creates even more questions going in, but the stock sold off considerably and had a hard time recovering from that.
Finally, there's Alphabet, with Neom owning 5,195 shares. Google Cloud, part of Alphabet, stands as a robust pillar, enabling clients to build on its AI capabilities. Despite the steady reduction in shares, Buffett's continued interest highlights the company's strategic role in AI development and its massive influence in digital advertising. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Yeah, I have to wonder, too, what it means for investment into China. There was that piece over the weekend, I believe, which talked about how the DeepSeek phenomenon has kind of reignited interest in investing in China. And this comes against the backdrop of everything we've seen with ByteDance and TikTok and all of the geopolitical issues. But you do have a incredible amount of talent in China, which is important for the tech ecosystem. And so just kind of what DeepSeek revealed about the potential for investing there in a way that really hasn't been the case over the last few years or so, is these tensions have simmered as the nations have decoupled as a result of just the competitive threat there, kind of reigniting the interest in investing in China. I thought was pretty interesting and pretty bold.
The stage is set for potential growth. Investing in the AI-driven stories of Broadcom, Microsoft, and Alphabet could be your next strategic move, just like Warren Buffett. The jury is still out on whether Nvidia is going to be a second-rate stock to these other three, but Warren Buffett thinks they are interesting enough to invest in secretly, and that should mean something. But what do you think? Do you agree with Warren Buffett's unspoken assessment that these stocks are better than Nvidia? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.